Hey, welcome back to the Xplor podcast with Scott and Ryan. We like to talk about real estate, entrepreneurship, motivation, and much more. We got an exciting episode today. We have a guest on with us, and she was voted Best Loan Officer of 2022 by two different organizations, the Pitch KC and Overland Park Community Votes. We've known her for a while. We've been working with her for a long time, especially Scott. Brittani King, welcome to the show.
Hi, thank you for having me.
Scott, how you
Brittani,
doing?
appreciate you coming on, Brittany. Looking forward to our conversations today.
Me too. Should be fun.
Ryan, you want to kind of kick it off, get going? Actually, I apologize. I'll take that back, guys. I will kick it off. Today, we're going to talk a little bit about, obviously, Ryan mentioned the loan industry and what's going on, and specifically residential. We might hit a little bit on commercial, but Brittany and I have had a long relationship working together, have closed a lot of transactions over the past several years, referred business back and forth, and she's definitely one of the top in the Kansas City market, no doubt about that. Couple things about Brittany: she really likes dogs, so don't try to compete with her or tell her you like animals better, because she might literally choke you out. She's a great time to party with. She loves to have a good time, and her husband is a badass guy. So actually, he's in India right now learning how to do living transplants. Pretty
Living liver donor. Yep.
living liver donor transplant. So pretty cool. He's got some great stories. And from that, we'll just kind of get started. Brittany, tell us what's going on in the industry. We know that the real estate market's kind of been a little bit of a roller coaster the last 12, 24 months, or really the last 12 months, I guess. It started about this time last year.
Right.
Where are we at on rates? Where are we at with new guidelines and restrictions? We keep getting hit almost every week, every other week with new guidelines that Fannie and Freddie are implementing. So let's talk a little bit there
Yeah.
and start with that.
Well, they're definitely keeping us on our toes. We saw a slight decline in interest rates last month, but it appears they have creeped back up to where they have been over the last 8 to 10 months. I have good news and bad news. It's what you guys would prefer to hear first. So what do you say, good or bad?
Well, actually, before we hit that, let me ask you, what are rates? Like, what's it look like on conventional versus FHA? What are the rates right now versus what they were this time last year?
So interest rates are sitting around 7 to 7.25 right now for government and for
Okay.
conventional or conforming. You're going to see them right around 7%. Some
Well,
have,
it's about double then, because last year this time was about 3.5, 4. Is that right?
right, yeah, about four in mid fours about this time. And then March, April is when we
Crazy.
started to see the increase. So it's definitely something I haven't experienced in my career. I joined the mortgage industry in 2010, and I've been really lucky over the last 12 years. And then this year hit, and it has pushed some mortgage lenders out of the industry because a lot of them got in, 2020, 2021, where rates were in the twos and threes and business was falling from the sky. And, then you have an off year like 2022 and probably most of 2023. And it definitely changes things for those in the industry that don't have a steady referral base. I
Yeah.
think it's 18 to 20% of individuals left the industry on the lending side.
This year or within the last 12
Yep,
months
in
or
the last
so? Oh,
year. Yep.
wow.
Mhm.
And I actually thought it was a little bit higher than that at this point. I thought I just heard a stat the other day that said up to 34% have now left the industry.
Hey, I wouldn't mind that, like
It's, but I
I'll
mean, it's pretty
soak up that
crazy.
business.
Yeah, exactly. Hey, same here. It is pretty crazy though when you double rates. People have gone on a frenzy for the last several years, just refinancing what they just refinanced a year or two before that.
Mhm.
Like it's just been a constant refi game for everybody. So as a lender, I mean, it's been spectacular.
Yeah,
But
refinances are off the table. I mean,
that's what I was gonna
that's
say.
typically 50% of my business. So if you think about last year, I lost almost 50%. of refinance business. And, there are one-offs here and there when people have to refinance, but no one's just willingly refinancing right now. So we'll see
What are
that
you doing
again.
Yeah, sorry to interrupt there. What are you doing to offset that? You said 50% of your business. So what's your game plan? What are you, at Leader One, what's your team really doing right now to get out there and get that 50% back? What kind
Yeah,
of
so
strategies?
we have to find it elsewhere. And really, we've had to go back to basics. And that includes, networking events, reaching out to past referral partners that maybe we didn't keep up with the last few years because we were just so busy, reaching out to new referral partners, talking to our old clients and asking for a referral if they know of anyone buying or selling. We'd love to have a conversation there and get an opportunity. So we've definitely had to switch our focus. We're no longer tied to our desk working on loans. We're out there meeting people, happy hours, lunches, coffees, just to try to get out there and gain some new business from people that we haven't worked with before, and then also maintaining our relationships with our other referral partners.
And I think you said it perfect. It's something kind of a theme that I've been playing along. And Brian Buffini, I think I give credit for this, but getting back to the basics, that is really the story right now in the last 6 months or more. Is we've got to get back to doing what we're not used to doing. That normal that we've experienced the last 2 years is no longer the normal. And a lot of people, like you mentioned earlier, a lot of lenders that haven't been in the business prior to this craziness, really the last 2 years, 3 years, have no clue what's going on. Same thing with a lot of real estate agents.
Right.
I got in 2015 or so, and it wasn't crazy busy. We still had a little bit of business then, though. So I'd say we're still busier now than we were in 2015, but I'm still kind of waiting for that little bit of change in seeing something different myself, and more of in a buyer's market, because I haven't really seen that very much either. So it'll be interesting going forward. Brittani, real quick, in 30 seconds or a minute, whatever. What is your guys' competitive advantage at Leader One? Why use you? Sell yourself real quick for everybody.
Well, as you mentioned, I'm a good time, but more importantly, I take care of my clients. I mean, we had an example just this last week. I had, you had a client that wasn't happy with their lender, and within an hour they had filled out an application, and I had already given them options. And this was on a Thursday night at 8 p.m. Friday morning, I
Yeah, it
had
was
the
late.
contract, and they agreed that I had the best options for them. And we went to underwriting Monday. It's out of underwriting. Like, it's just very efficient. You work with me from beginning to end. Communication is there. My clients have my cell phone. I also have a killer team behind me that they ensure everything moves smoothly throughout the process. So I think that would be it. I mean, I'm available. I make things happen very quickly if needed because they were already under contract with a closing date. And that's just one example. But honestly, like I pride myself on taking very good care of my clients and trying to ensure that the process is as smooth as possible and it doesn't stress anyone out.
Yeah, no, and I'll give you props on that. She's exactly right. Last week I called kind of in a I wasn't flustered. The clients were flustered, and I originally tried to get them to call you. They wanted to use somebody else. They can use whoever they want. I'm just here to help guide them. And when he called in that emergency, I said, all right. He was already calling another lender, and I just told him, hey, call whoever you want. I just need you to promise and let me give you one of my go-to people. I called 2 people. You were the only one that answered, and actually I texted you or called you. I don't know, whatever it was, but right away you were at dinner. You answered. We had it done within an hour and a half of me and you talking. And I mean, it was fast. So she definitely takes care of people. We've closed some crazy loans together in the past, some really unique loans, some stuff that a lot of lenders just don't take the time to dig in and look at stuff. That was one thing with this client we're referring to. His past lender, 2 people that he talked to, didn't even give him these different options that you proposed to him. You gave him 3 different options and let him pick. Well, he had never even known about those other 2 options. And it ended up being to where it made more sense for him to go on his own versus having his significant other with him on the loan. And a lot of things worked out better, and it cost him way less money.
Yep.
So I would definitely give you props to that. You dig in deeper and actually provide information to a lot of these folks versus just telling them, hey, you qualify for this. Here's what it's going to look like. Let's go forward.
Yeah. I mean, there's a mortgage lender on every corner. You have to find one that's going to work, hard for you, give you the options, and just, again, put your mind at ease, because I know he was contemplating walking away from the contract because he was misled. And that's a big deal. It's a big deal for you. It's a big deal for them. They were excited, and then they weren't, and then I had to get them excited again. So that happens often. It happens more often than you would think. But then I also have clients that start with me and they're happy from beginning to end, and that's what I've worked hard doing, is just building those relationships, ensuring that they come back to me when they're ready to buy their next house in 3 to 5 years.
Exactly. And that's, one more thing real quick on this topic is we pride ourselves on our team, and I especially do, with understanding lending. I don't know everything about it, but I know quite a bit about the lending side. So when we're working with clients and we hear that they're, again, you can use whoever you want, but when they kind of tell us we're using so-and-so for our lender, here's what it looks like, because I always ask questions to figure it out. Then I start asking additional questions to them, like, okay, did they tell you about, PMI buyout? Did they tell you about this? Almost 90% or more people have no idea these simple questions I'm asking them that really these lenders should be bringing up and offering them, or, advising them on. And that's one thing that you've always done, and I really appreciate that. And I know they do as well. So.
Well, and back to basics. I mean, previously we had to go into detail about loan products and numbers, and 2020, 2021, we were so busy. People just wanted the rate. They didn't care about anything else. So, we're just giving them the loan, not having to really go into detail on the specifics. Yeah. But now it's like, we need to take the time. We have the time, and people aren't chasing a rate. They're chasing a house, and they want to make sure that they're making a sound financial decision. So.
Brittany, bring up another topic. Sorry, we're going to move on to your what's good, what's bad news. But when you're talking about shopping rates, we actually had this same kind of thing come up this past week, where one lender said that they could give a rate that was much better than the rate that you were providing. Tell us how lenders do that. Like, when a company is out there marketing this crazy rate that's a half a point to a point below everybody else, what are they really doing? Is there something special they're doing, or can they really just provide that better rate? What is that?
So, unfortunately, there's, you see this great rate advertised. What you don't see is the fine print. And, legally binding documents are really important in this mortgage industry. So what we see is you jump online and there's a rate of 5.875, which 100% does not exist right now unless you're paying what is called
Google promises it.
Yeah, discount points to buy down the rate. And that's definitely what lenders are doing. They're saying, when I was quoting 6.625, they have a 6.125, but at what cost? And that's definitely what they're doing, is they're charging to get that rate. And you have to look at your break-even point there. If you're going to get charged $5,000 for a quarter lower or 0.5% lower, what's the difference in the monthly payment and then the recoup time? Are you still going to be in this house? Are you still going to be with this rate? We don't know. And so you really have to outweigh the pros and cons there of paying more to get a lower rate versus, just taking a par rate, which is a rate that doesn't cost you anything. So right now, That's not very common. You're seeing actually some discount points associated with almost every rate and every loan product right now, but that's essentially what they're doing. There's a little asterisk when they're advertising rates online, and that little asterisk, if you follow the page all the way to the bottom, it's going to say, it's based on this loan amount, this credit score, this area. It's just, there's so many details. And then, we have lenders out there that are just sending a worksheet, and this is what this lender did. It's a worksheet, and it didn't even include like all the state and legal fees that are charged on a mortgage transaction. And I told the client, I said, you need to get this on a loan estimate, because they need to be able to break all this down. And that's their legally binding document, essentially, is the loan estimate, not some worksheet they typed up in Word. So that is definitely something to watch.
Again, they were trying, this particular lender, and this situation was trying to be slick and get
a little
things
bait
past
switch.
Different clients. Yeah, and I hate that. I cannot stand it. We see it too often in the industry, real estate as well, and it drives me insane. One other thing that go ahead, Ryan.
Well, and I'm not saying it's right, but with what Brittany was saying earlier, with so many people leaving the industry, there's people that are hanging on by a thread. So they're just getting desperate and doing, let's call it shady or sketchy things to try to secure that client, to get them to sign and then move forward. Whereas they talk to a veteran lender like Brittany, she's seen people probably take that road, and you're not going to be long in business doing that. Being upfront and being real is the better long-term play. But these people are getting desperate out here, right?
Right. Yeah. I mean, for sure. And it's a timing thing too. If you have someone who's under contract, like this client, and they're closing in 3 weeks, you have a lender saying, we'll offer you this, move forward with us. You say yes. And then in 2 weeks, you find out that they actually can't deliver that product. Then what happens? You have a week before closing and you don't have the loan you were told you were going to have. And so, I mean, timing is everything. Like, okay, they don't have time to go somewhere else and go through the whole process. So maybe they're stuck with that. They wouldn't be able to extend their contract. So it's a lot. And yeah, you're right. I mean, you do see, people doing not things that aren't in the best interest of the client just to get them in the door, but we try to avoid that at all costs here. Yeah.
One last thing that I just have to hit, because I think I said one last thing 3 times now, but 20% down versus, to not pay PMI. Everybody still has this misconception that you have to put 20% down so you don't pay PMI. PMI became this really nasty, really buzzword in the industry, in my opinion, to where people are so scared of PMI, primary mortgage insurance, what I'm referring to, which if you don't put 20% down, they put on a loan. But there's also ways around not having to pay that forever. Can you explain kind of what that looks like, or what that process is, versus having to put down 20% like everybody thinks when they get into this?
Yeah, so private mortgage insurance is essentially a fee that's rolled into your mortgage payment that you pay to a third party. And this third party is there to give a warm, fuzzy feeling to the lender. If you were to default on your loan, they are there to kind of pick up a portion of the amount that you defaulted on, because they consider anything less than 20% is risk. It's a riskier loan because you have less money invested. So private mortgage insurance, you pay it, monthly. Normally, that's what most lenders will tell you. It's a monthly fee. And it's based on down payment. So for every 5% down, so 5, 10, 15 to 20, 5% down or less, you're going to see a higher premium than if you were going to put 10% down. And then again, a lower premium if you put 15% down. So it's kind of finding that sweet spot for people. If they have 10% down, really the 10% down option is great, because there is another alternative there. It's called a mortgage insurance buyout, and you can basically pay one-time fee at closing, and you don't have that monthly mortgage insurance premium. So it's essentially a closing cost that you pay, and it keeps your payment lower. And that 10% down is a really nice threshold there, where sometimes it's only, maybe $1,700 to $2,000 to buy out your mortgage insurance. Now, it's a
big deal.
We have to be careful right now with this market, because you could pay your $2,000 to buy out your mortgage insurance, but then interest rates drop in a year and you want to refinance, but you only bought out your mortgage insurance for that loan. So if you're going to refinance and you don't have your 20% equity yet, you're going to have to either pay that buyout again, or you're going to have to go with monthly mortgage insurance. So we're definitely trying to weigh the pros and cons there just with this current market. Like, okay, do you want to pay that one-time fee, but then there's a possibility you'll probably be refinancing, or are you good with just paying, $75 a month for the next 12 months, and then we can reassess, when we refinance.
Yeah, that's a good point. I didn't even think about that piece. That is a new piece that I haven't considered or ran into just yet.
Yeah.
I would almost think you'd be better off probably paying to buy points down at that, in that scenario versus buying PMI out, or
Yeah, but then you think about you're buying your rate down, but for how long? Like how long are you going to have that rate? So it's really complicated right now. This is something we haven't seen. Like, when rates were in the twos or threes, you weren't buying your rate down. You were buying your mortgage insurance out because you knew you were going to be in this loan for the long haul. And now it's like, does it make sense to buy down the rate if there's a chance you're going to refinance in the next year or two? Same with that mortgage insurance. So I don't know. Right now, in my opinion, I think the least amount you pay in fees or buyouts is probably the best route to go. I think we'll see rates around 7 to maybe 8 through the rest of the year. I can't really predict that, but we haven't been that impressed.
That's what we're seeing.
Yeah,
we're seeing the same.
We're not getting a lot of great news over here.
No, holding on to cash. I've been trying to preach this for at least the last 12 to 24 months is, guys, at the end of the day, having cash is always going to be a good thing for you. Now, if you want to put a little bit down, whatever, but if you're debating on if I'm going to do 20 or 10%, I would think it's everybody's own decision, but I would put the less amount of cash down and hold that in savings. Keep that money. Don't go spend it. If you're going to spend it, just put the money down. If you can be responsible, put it in savings and you're not going to touch it, just put it there. You have a little bit of a safety net. Because another thing you got to think about, PMI and what we were just talking about, if prices do drop, like a lot of people are scared, we're going to see this big drop, blah, blah, blah. I don't know if we're actually going to. In certain price points, the higher end, we might. I mean, we've already seen it pull back a little bit. Yeah. If it's a starter home, you're probably not. But if prices do pull back, then you're in even more of a tricky situation, because if you do go to refinance, well, if prices pulled back 10%, now you've got that gap there too. So that's something else you've got to really consider and think about through all of this, and really be forward thinking versus just thinking in the moment, like a lot of us like to do at the time. So hopefully your lenders, your real estate professionals are helping you guys think through these situations. It's a little stressful, but at the end of the day, nobody knows what's going to happen. We can only plan for what we know and prepare for what might happen. And if we do that, we're in good shape. So,
well, yeah. And we have to consider, like, real estate as an investment in itself is still your number one investment choice over time. So while people are, panicking about interest rates, like, it's the actual property itself that's your investment. The interest rate it's not tied to you for the 30 years. It never will be. I mean, historically, every, I think, 2 to 4 years, people refinance, and that could be refinancing to a shorter term, or, maybe using some of your equity to take some cash out, or, just in turn, just lowering your payment with a lower rate. So real estate is still a great investment, and it always will be. It always will be, time over time. And the interest rate, again, is just temporary. So don't let that deter you from buying, because if this is something that you're wanting to hold on to long term, it's going to be beneficial.
Says from the queen herself, that's been looking at investment properties and is the pickiest, scaredest investor I've ever met.
I'm scared. I'm scared because
a little different, but that is a little bit different.
That's another show. That's another show.
Yeah. Anyway, we'll get forward. So you had mentioned, different guidelines, different things, good and bad, good news, bad news that's coming out right now. So I guess, Ryan, what do you want, good or bad first?
I was going to say my vote would be rip the Band-Aid. Let's hear the bad. And
Let's do it.
Okay, I agree. So the bad news, I mean, it will impact, anyone buying with a conventional conforming loan. So that's your standard mortgage backed by Fannie Mae and Freddie Mac. So the Federal Housing Finance Agency made an announcement that you're going to see some significant changes to LLPAs, which what is an LLPA? So that's a loan level price adjustment. So this is where you see pricing change for certain levels of loans. So for example, you're seeing these loan level price adjustments are being implemented by mortgage companies on conventional loans. You're seeing higher rates and higher fees for higher loan amounts. You're seeing higher rates and higher fees for second homes, and you're going to be seeing higher rates and fees on cash out transactions. So these you're seeing it now. Banks, lenders are implementing these higher rates to home buyers with a conventional mortgage. And, speaking of cash out, the other thing that we're going to see is, previously you could take cash out on your property after you have owned it for 6 months, or after you've had your mortgage on it for 6 months, you could go and take equity out of your home. Now there is going to be a requirement where you have to be in the property with a mortgage. There's a 12-month mortgage seasoning requirement. So if there's a mortgage on the property and you want to take cash out, you have to wait 12 months before you can do that. So conventional loans, we're seeing some changes, not so great. I don't know if this is long term. I wouldn't expect it to be. As with anything in the industry, we see it come and go. But that's the bad news is you're going to see higher rates for, more qualified buyers. Even the higher credit score borrowers are seeing higher rates. So it used to be if you had a 760, 780 credit score, you're going to get optimal pricing, optimal rates. That's not the case right now. It won't be until they change these loan level price adjustments.
so I had a question for you. From an article I was reading, lower credit scores might have a adjustment in their favor, whereas higher credit scores are going to get charged more. What, in your professional opinion, why are they doing it that way? Like, what's the purpose of that?
That's a good question. I'm not entirely sure on the reasoning. I think, with the lower credit scores, we've already seen that price adjustment. And honestly, I don't know that there's going to be a huge change for the lower credit scores. They're essentially, going to be probably where conforming rates are now or conventional rates are now. That's not going to be a huge shift. In terms of the higher loan level pricing adjustments, I think, the industry is panicking a little bit. Lenders are panicking, Fannie, Freddie. I think just trying to compensate for the changes that we've seen over the last year. And I don't know. I'm not entirely sure why we're seeing that, but I hope it's short term.
Got it.
Yeah, and there's a price point to where those LLPs kick in, or no, Brittany? Is what that 225,000?
Yeah.
Could you explain that and what that looks like?
Yeah, so those high balance loan level price adjustments, really any loan amount over 225 is where we're starting to see that higher rate kick in. If you're below 225, so it's your loan amount, it's not your purchase price. So if your purchase price is below 225, or your loan amount's below 225, sorry, there's going to be a little bit lower. And it's not a huge difference. Right now, I don't know how high it could go. To be honest, right now it's maybe a 0.25% difference. But that is actually it doesn't take effect until May 1st, but lenders are already implementing it right now.
Yeah, no, it's going to have a significant impact. The additional fees already. A lot of people have been buying houses with, almost no money out of pocket for the last couple of years. And that's
Yeah.
become almost the mindset. I
Right.
still get calls today on, hey, how about, can you tell me about this first time buyer loan program? And I'm just thinking, like, I don't even know what you're referring to be honest. I mean, some of these people might market something like that, but we haven't seen any real specific first time buyer loan program in a long time that I know of.
Yeah, I mean, there's a difference between a first-time home buyer program, like a loan program, and down payment assistance. So, in terms of like
Exactly.
very common loans for first-time home buyers, would be an FHA loan, Federal Housing Administration, and that requires 3.5% down. And then there's a conventional option that requires 3% down. But you have
Yeah.
to be a first-time home buyer. So normally it's 5%. But if you're a first-time home buyer, you can qualify for the 3% down on conventional. So really it's not a big change. It's been this way for a long time, but the incentive is less out of pocket for someone buying their first house.
Yeah. And what people need to realize is these guidelines are going to really impact the already lower income borrowers that are already struggling.
Yep.
In a $225,000 loan limit, that's pretty low.
Yeah.
I mean,
Yeah.
there are some markets that might work, but
And that's what I'm seeing right now. That could change, different markets. It could
yeah,
definitely adjust. And even now we could maybe see a change, as this progresses. Okay, maybe they bump it up to 245 or, maybe we'll see a shift there. So I just noticed it on anything below 225. That's where I'm seeing the difference in the rate.
If they see
yeah, no,
if they see a negative impact, are they pretty? I mean, it's probably not. Is there like, are they going to let this run for 6 months and see what happens, or is there really a timeline that are they just shooting from the hip?
Yeah, I mean, I think that anyone involved in real estate right now is panicking a little bit with this announcement and the negative impact it's going to have on the housing market. I don't know if this is directly related to COVID still. I think it's probably the economy and kind of what we're dealing with inflation. But I do think that this is short term. Is short term 6 months? I don't know. Is short term 2 years? Maybe. There's really no way to predict it, but I think just trying to kind of claw the way out of what we're dealing with.
Got it.
well, my theory is they're trying to slow down the small landlords. Every little thing they could do. About a year ago, they changed the
Well, you saw,
guidelines on
right.
loans.
Yep.
Right when we
I
were
mean,
refinancing a bunch, they changed
yeah.
all these guidelines and made it harder on, because you could have up to 10 loans with Fannie and Freddie.
Yep.
And so what a lot of smaller landlords would do is they would use their first 10 loans and buy all these rental properties, keep those loans. And then when they got to number 11, they had to either buy that one as an investment loan or go and refinance, do whatever if they wanted to use a Fannie Freddie back loan. Well, I mean, the last 24 months, every single time there's an adjustment and policy or guidelines on these loans, it seems to be really trying to slow down the investor side, in my opinion. Now,
Yeah.
obviously, inflation, everything else, I could be completely wrong, but it is going to slow down some inflation, whatever else. But when you have cash like these big REITs do and these big funds, they don't care about the way the loans work because they just go on the back end and put a huge note and negotiate their own stuff. But the way
Yeah.
to get more houses faster for them is to eliminate as many buyers as you can out of the market
Right.
because
Yeah.
they
No,
are
and
greedy.
that was pretty significant when we saw that change in investment property rates. I mean, that was over a full percent, like overnight.
Overnight.
So it was a shock. This is
And
more tailored.
the cash out piece, sorry to interrupt you, the cash
Yep.
out piece changed overnight too.
Right.
Where I was like, holy
Right.
cow, we were just talking 75%, possibly
Yep.
80 on some stuff.
Yeah. Yeah. No.
And then it went down to 70
Yep. Yeah.
cash out, which
Um,
is a lot.
Yep. Yeah, especially when you're, refinancing multiple properties at the same time, trying to get equity out of each of them. It is, and the increase in the rates too. I mean, it's not been a fun year and a half. 2020 was incredible. It was amazing, and you want to ride that wave, but that's not how this industry works. And you have to hang on and hope that things get better. So that's what we're doing. And again, real estate is still amazing. It's just the the uh, the changes that we're seeing. We're not moving in favor. They're just making it a little harder. And that's Fannie Freddie, that's conventional. There's some good news. There is some good news on the government side of the loan options. So if we're going to just kind of transition there, so good news for VA buyers, Ryan, they are lowering the VA funding fee on your loan. So first time use the VA funding fee. Basically, that's a fee that is rolled on top of your loan amount for veterans. And it was a 2.4 and it's dropped to 2.1. So that's the percentage of the loan amount. So that's for first time use. For second time use, so if you've used your VA more than once, there's also going to be a decrease. I don't have all those numbers in front of me, but overall, that's really good news because that in turn keeps your loan amount lower and your payment lower with that decreased funding fee. So good news on the VA front. Rates aren't great on the VA front right now. We're not seeing a lot of par rates, so rates that don't cost anything. You're seeing some discount points associated with pretty much any rate right now, but especially VA. The other good news, and this is, I love to hear this. So FHA, the Federal Housing Administration, which we talked about, is a great first-time homebuyer program. They are lowering their monthly mortgage insurance premiums. So every month, you pay a set amount. It's a set premium, and it's based on your loan amount. And FHA has dropped that now, and they dropped it by 30 basis points. So what that means is
what was that? Broke up there a little bit.
Oh, they dropped it by
3 basis points.
30 basis points.
30.
So for example, like just math, if you're buying a $300,000 house and your mortgage insurance would be $203 a month on an FHA loan. Okay. Now that this goes into effect March 20th, your mortgage insurance would be $134 a month on an FHA loan. So
pays the water bill.
Yeah. So, we're probably going to be seeing more FHA approvals now, especially with the conforming conventional loan level price adjustments. If we can see lower mortgage insurance and overall like a lower payment compared to a conventional loan, like we're going to need realtors out there to start looking positively at these FHA pre-approval letters because it's going to be the better program.
That's interesting. FHA has not been competitive in the last 2 years, really.
And this is huge.
I take that back.
Huge.
It's always been competitive. I don't want to say it's not competitive. It's just when you're competing with people that are putting 10, 20, 30% down or cash, it's like nothing is competitive,
right?
Unless you're right there with them. So FHA has always been a great product. I've used a lot of FHA loans in the past. Personally, and for a lot of clients, it's just at different times, different loans are better and more competitive when it comes to buying the different homes. So keeping up to date on this stuff is very important, guys. Don't let your lenders just tell you things are the way they are. Like, ask questions, really understand, because you need to know what you're getting yourself into, or if there might be a better product out there for you.
Right. Yeah.
Brittany, are VA loans still 0% down?
Yeah.
Minus whatever points they have to buy? Okay.
Right. 0% down. You pay your closing costs. So still a great option there.
Great product still. Yeah. I don't think a lot of people realize that they do roll the rate, that 2.4, now 2.2 2.3, you said?
Oh yeah, 2.8 is
2.1,
going to be
sorry.
2.1. Yep.
Most people don't realize that they roll that in on the back end, I don't think, but I always try to explain it to clients up front.
Right. And that goes
You're
into
paying for it. It's just on the back end.
Yeah, that goes into effect on any loans closing on or after April 7th, I believe. So if you're going under contract now, VA, you're probably not going to close until right around then anyway, just with the timeline. So if you're looking for a house right now, make sure you're talking to your realtor about that and ensuring, and you as a realtor, understanding like, okay, we don't want to close until April 7th if we're going VA. With the FHA changes to that mortgage insurance, it's March 20th on or after, and that is when FHA endorses the loan. So my one client with that I was just giving the example, $300,000 purchase price, I disclosed the loan last week and we had $203 a month in mortgage insurance, and now we're actually closing on March 20th. That's our closing date. And we're going to be able to give him the lower premium. So pretty cool.
Awesome.
I haven't even got to share the news with him yet, but I'm really excited.
No, that is really nice. And you're exactly right when you say, real estate agents need to be just as educated as anybody on this stuff. That is, in my opinion, their responsibility. And you don't have to know everything, but you need to know enough to at least refer them out to the lender and say, hey, there's some questions here. You should really be looking at these things. Give your lender a call and ask, this, and this, and make sure that you understand what's going on. And when we're writing contracts, making sure that we know these dates, because that can make a huge impact. $70 a month adds up over 30 years.
Yeah, for sure. So
that's 30 grand almost
for him. Yeah. We will be seeing more FHA approvals coming out. That mortgage insurance is huge because with a conventional loan, your mortgage insurance is based on a handful of things. Your credit score plays a huge role in how much your mortgage insurance is on a conventional loan. Your debt to income is also a big factor. So with FHA, it's a set amount, regardless of your credit score, regardless of your debt to income. That mortgage insurance premium is a set amount. And with conventional, like we have to go run quotes with all these mortgage insurance companies and determine who's offering the best premium for you. But if it's higher than what an FHA loan is, why would we continue going down the conventional route when you can save with lower mortgage insurance? So I'm excited about it. It's kind of been a stigma. Stay away from the FHA loans, or listing agents aren't accepting those, but we're going to see a shift. And it takes educating, everyone involved that, hey, this is why we're going this route.
Yeah. I think being, constantly, weekly, daily, being in touch with your lenders or whoever else that you work with and just asking them to keep you updated. You send me stuff all the time just to make sure that I'm aware that things are changing or what dates we're going to be moving. These LLPAs are going to be taking place and everything else. Like, it's important. And it does make a significant difference, like we were just saying. So staying on top of this as we have so much changing almost on a daily basis in your guys' industry is probably necessary.
Yeah. So not all
what
bad
else,
news
Ryan?
here.
Well, I was going to check with Brittany. Was there more news or?
That's the big stuff that I have right now.
Look, guys, I talk to her too much, too often. I'm ready to be done with this. No, I'm just kidding.
No, Brittany,
I see your dog sleeping in the background.
She's bored. Mortgage talk is boring.
Yeah, I was going to say, we've been talking a lot of business and we are getting kind of long on time, but was there any stuff that you wanted to talk about, Brittany? I know you're a big animal advocate and stuff like that.
All I can say is adopt your next family member. The shelters are overflowing. spend some time there. They need volunteers. They need dog walkers. If you're not sure, there, some local rescues, just search, Google them. Kansas City Pet Project is a big place that needs a lot of dog walkers and volunteers. Foster, donate. I mean, there's so many things we can do to help the homeless pet population here in Kansas City. So I'm a big advocate. You'll usually see me with a foster dog, or I'll be at one of the rescues. Walking some dogs. So that's my
She's
little
always got
plug.
different dogs in her house. Literally
Yeah,
all
yep,
different
yep.
dogs every time I'm there.
So that's
Yeah.
Josie. We brought her into our house about 8 years ago. So we adopted her, and yeah, that's it. That's my plug. I
Yeah.
She
big
loves to
advocate for
slobber and
adopting.
steal my candy.
She
Josie
does.
steals all my candy
She does, and she'll give you some white dog hair to leave with. So
every time.
yeah,
Yeah. I know that stuff's important to you. So I wanted to make sure
yeah.
you could
I appreciate
plug
that.
it.
Yeah, I appreciate that.
But we really appreciate you having you on. You've gave us, I mean, I got tons of notes here to go through, and you're just such a great resource. And I mean, you've helped, personal family of mine with mortgages and stuff, and your communication skills are top notch and your people skills are great.
Thank you.
Was there anything you want, where can people find you? Website, social
Yeah.
media?
Yeah, so I am with Leader One Financial. My website is actually brittaniking.com. My spelling on my first name is a little unique. It's BRITTANIKING.com. And there you can look at loan options, read a little bit about me, my phone number, my email, apply online if you're wanting to get pre-approved. But that's probably the best way to reach me is just going onto my website and contacting me through either email or phone.
Great. Scott, you want to take us out?
No, Brittany, again, we appreciate it. Look to continue working together, and we will be in touch soon.
Yeah, thanks for having me, guys. It was fun.
Thank you.
Yep. Have a great one. Thanks,
Have a
guys,
great
for
Bye.
listening. Bye.